And we are live. Good morning, everybody, and good morning, Greg. How you doing today, sir?
Really good. How you doing, Ben?
Good. Excellent. Looking forward to today's show. Can anybody give us a quick mic check? Make sure we sound okay. Let's see. We'll let people come on for the next couple minutes. Or maybe not a couple minutes. We'll let everybody get on. Sounds good. Thank you. Welcome from Orlando.
Oh, that's down my neck of the woods. I'm in the Tampa Bay area.
Not far.
No,
How
not
far is
far.
Orlando from Tampa Bay? A couple hours?
It depends on traffic. Without traffic, it's about an hour and a half.
Oh, really? Okay.
I'm on the other side of Tampa, on the west side by the beaches, so it's probably closer to 2 hours to me where I am now.
I just booked a little trip for Pensacola at the beginning of next summer, so I will get some Florida love.
All right.
Yeah. All right. Well, I think we're good to go, Greg. Why don't you kick things off? Tell us where we're at in the market, and we'll look over some trades and see if we have any questions.
Okay, very good. Thank you, Ben. And thanks everyone for being here and being part of our community. First off, I'd like to talk about, excuse me, Fed meeting is going on today. Today is the second day of their 2-day meeting, and they should be announcing something as far as tapering and what they're doing with the economy. And really, anytime the Fed or Jerome Powell says anything, it could affect the market. So we need to keep an eye on that. Also, right now, continuing to keep an eye on Evergrande and their bond payments and where they stand with that. Now, Evergrande did make their bond payment last week, but they've got more payments coming up. And I found this interesting pictorial graph here. This is the payments that are coming up for Evergrande. Now, you have to keep in mind that Evergrande's their problems are not going away. Eventually, they're going to default. You have to remember, just a couple of weeks ago, they had problems coming up with like a $25 million bond payment, and this is what's coming up. So, if for any reason they don't officially default by March 23rd of next year, that's going to kill them right there by the looks of things. Okay. So again, we just need to keep an eye on this to see if it's going to affect our markets. It will surely affect the Chinese markets, but we just need to see how that's going to spill over into us and if it affects our markets. The world economy is so small since we all do so much trading with each other that this is going to affect us somehow. The question is how much. So just a word of advice to keep an eye on that, which we're trying to do for you.
Yeah.
Now, part of what I think my job is here is to share with you valuable content that I'm finding elsewhere on the internet. And this is a really good YouTube video from Danielle DiMartino Booth, if I can say her name correctly.
Okay.
This is a 26-minute video, really good analysis of the politics and information on what's going on right now, not just with China, but with our own, the Fed and Chairman Jerome Powell is up for renomination to continue to be Fed chairman. There's a lot going on, and she's got a really good insider's view of what's happening here. So if you want to go through this and watch it, it's a really good video to watch. A little bit dry sometimes, but that's okay. Good information. You probably will need to just write down the title of this if you want to watch it. Aggressively hold these assets as Fed cannot or can't acknowledge problematic inflation. Danielle DiMartino Booth. Really good information there. Also, along the lines of valuable information, this is a book that I read years ago called Manias, Panics, and Crashes. Very interesting and valuable insight into how the markets work and how these things unfold. So really enjoyable, and it'll set you back a whole $3 if you buy a used book. So it's not going to kill you on the pocketbook. $3. Enjoyable. Okay. Now, before we get into this, let me go back for just a moment. You need to know at this point for the big picture is that at this point, only one of two things is going to happen. Either inflation is going to continue, or if they clamp back on that too much, they'll get a recession and cause a bear market to happen. I don't see either, anything in between at this point. And so we've got to keep a real close eye on how the market responds to anything Chairman Powell says. Okay. Now, most of the stocks in the Dow have already reported earnings. So most of these you can trade without any issue. We won't have another earnings report for another 3 months. Okay. But there are 4 that have yet to release their earnings coming up. So you don't want to trade these that are circled. Include Home Depot, Nike. Well, Nike's far enough away you could actually place a trade on Nike. But Walmart, Home Depot, and Disney, you need to hold off on those. Okay. So now let's look at the trades we have going on right now. Okay. Now the first one I'm looking at here is 3M. We just put a trade on yesterday for 3M. We sold the 182.50 call for a bearish credit spread. We don't think it's going to go up to 182.50, and if it does, we think it's going to bounce back off resistance. Now, last time I checked, 3M was down on the day. Let me check on that real quick on my phone here. Let's see here. Yeah, 3M is down $1.50 on the day, currently trading around 180.44. So we're doing okay with our 3M trade. I was starting to get nervous this morning because it had a strong day yesterday, but we're doing fine. Also, Caterpillar and McDonald's, those trades are also looking good. So let's pull those up real quick, see if we can get a quick look at that. Get a closer view here. Okay. So this is McDonald's. We sold a 237.50 put, which is way down here, way much below the low of yesterday's 2 days ago candle. So we're sitting pretty on this. It looks great. In fact, you might even want to exit if you've got 80 to 90% of the profit in the trade, or you can just hold on. It's only till Friday, November 5th, when it expires. So we're sitting just fine on this. Let's look at Caterpillar.
Hey, Greg, real quick, is it too late to enter the 3M trade? That was a question we had.
No, it's not. Because it's come back down, we should be just fine on that. So you can still enter that. At this point, it's just a question of, are you getting enough money in the credit to make the risk worthwhile?
Mm-hmm.
Now, let's see. We got a credit of around $90, $85, $90, $100, something like that for 3M. You should be able to get something like that. If you can't, I wouldn't do it less than $85.
Okay.
Because on these trades, if you get less credit, you also have increased risk if the trade doesn't work out. Okay, so that's why it's important. I'm not as concerned about $5 or $10. I'm more concerned about the risk versus reward ratio.
Sure.
Okay, so that's kind of where we're at on that. So let's go to Caterpillar. So Caterpillar, we sold the 197.50 put, which is way down here at the low of 4 days ago. That big up candle about 4 days ago. It's at the bottom of that, and so we're sitting fine. We're a good $5-6 above, where we sold the put. So we're doing just fine on all 3 trades right now. The
And when
only
does
one that's even close is the 3M.
CAT expire?
I believe it's November 12th, which would be a week from Friday.
Mm-hmm.
So I really like doing these short 2 to 3 week trades. You get almost as much credit for a 2 week as a 3 week, but it's, quite a bit shorter. So you can make a quick buck and get out, go on to your next trade.
I like that strategy.
I do too. Okay. So those are the 3 trades that we have on right now. Let's take a look at some stocks that I'm looking potentially to do a credit spread on.
Hey, real quick, Greg, before we move on, members or viewers watching right now, does anyone have any questions on the current trades that we're in? Greg and I both kind of double tackle the customer service. Had some questions this week. I think we addressed most of them, but a lot of people I've also said, hey, this is a great resource. Come to the call, come to the show. So if there are any questions, this is a great time to ask. If not, that's great. Maybe we got them all in customer service. Just want to give this opportunity.
Okay. Now is also a really good time to, if you want me to look at any stocks, I'm going to present 4 or 5 stocks that I'm looking at for potential trades and why I'm looking at them. But if you have any stocks you want me to look at, go ahead and enter it in the comments and we'll take a look at that, okay?
Thank you, Greg.
Good question. Do we hold all credit spreads to expiration? That's the ideal goal because you can get max profit. So as long as the stock is not doing anything crazy or starting to really zoom towards our stop loss, then I'll usually just hold it to expiration for the max profit. So like right now with McDonald's, it looks great. It's not anywhere close, to where I need to worry about it. Same with Caterpillar. So right now that's the plan. But like I said, if it does really head in the wrong direction pretty fast, I'm going to assume it's going to continue and I'm going to exit with my profit while I can.
So what would the reasons be to pull out early? Like, I guess if you wanted to use your capital for something else, if you're 90% of the way there, and you wanted to put it on another trade.
Yeah, that's definitely one reason is if you want to use the capital for another trade. But really, again, it's all about reward versus risk. So for example, on any of these credit spreads, if you have, 80% of your profit and you're only a few days into the trade, you can just ring the cash register rather than, because you're risking 80% of your reward versus only 20% potential more you could get out of the trade. It's always a good idea when you have that much money in the trade to lock it in and go on to the next trade.
Sure.
Okay. I'm kind of saying 2 different things at the same time. I understand that, but that's the logic behind why you would want to get out early. Okay, let's see here. Looking at the questions. On the 3M trade, how do you exit using a stop loss if the stock reaches 182.50 as mentioned in the trade? Okay, good question. So what I basically am going to do, if 3M does go to 182.50 where we sold the call, if it goes up there, I'm watching intraday. I'm staring at the stock market pretty much all the time. So I'm going to watch intraday. If it spikes up there and comes quickly back down before I can place the trade, then I'm not going to exit. But if it steadily climbs up or if it's zooming right up, I'm going to get out quickly. Okay, I hope that makes sense. What we don't want is for the trade to get out of hand so we have a bigger and bigger loss. We want to just exit, take a small loss, and go on to the next trade where the odds are in our favor.
So what's the max you're willing to lose on that?
Okay, so if the stock goes to 182.50, usually you're going to lose about 50% more than you gained on the credit. So let's say you gained $100, then you're going to lose about 150 on the trade. Now, I can't give you an exact dollar figure because there's an aspect of options values that is unpredictable, and that's implied volatility. I don't want to get too much into that right now. We're going to go into that in more detail in the course, the seminar that I'm going to be presenting in a couple more weeks. But, you know, anytime basically the stock market goes down really fast, volatility spikes, and a lot of options prices spike too. Okay, but generally, like I said, you're going to lose about 150 if you made about $100 on the trade. So whatever it is, if the stock goes to 182.50, whether it's more or less, that's the point where I want to get out. Okay. So that should answer your questions there, Frank and Damien. Okay, let's see, moving on. So this is AT&T. Looks very weak. It's going up today. The big move where you want to place a credit spread is before those big 3-day candles about 2 weeks ago when it was up by the 50-day moving average. That would have been the right place to enter a bearish credit spread when it was up around $27.23. Okay, that's about where you'd want to place the trade. Right now, we don't know if it's going to bounce off support, if it's going to go up to the 50-day, or what's happening. So this is a great stock because it's steadily declining, but now's not exactly the right time to enter it, but it's one of the stocks I'm looking at.
What's that ticker?
For AT&T.
Oh, AT&T. Got it.
And in the same space, we've got Verizon. So about a week and a half ago, Verizon spiked up on that gap up day based on earnings. They came out with some sort of good earnings report, but since then, it's not looking pretty. It's started to come back down. So I would expect actually probably the long-term downtrend to continue and follow through. Okay, that's what I'm thinking. Let me give you a big picture so you see where the stock has been. So let me update this chart a little bit. So if you look at the big chart over the last several months, you can see steady downtrend. You got short-term ups and downs, but when the stock bounces up and spikes and starts to come back down, that's where you want to place the credit spread. So about the day after the gap up day, when it bounced off the 50-day moving average, that would have been an ideal location. Or even a couple days ago, it would have been ideal. A couple trading days ago when it briefly went up to the 50-day moving average, came back down. That's what you want to watch. How is it reacting to previous resistance levels? So I'm tempted right now with Verizon to sell a call around 54. I don't think it's going to go up there. And if it does, it's going to bounce off it because that's a resistance level. So that's kind of what I'm thinking of right now. Probably don't want to enter the trade right here, but this is one of those stocks that I'm stocking. Keeping a close eye on.
One of the stocks you're stocking?
I'm a stalker. Yep.
Okay.
Okay. Dow Chemical, not to be confused with the Dow Jones Industrial Average. If you look at the last month or so on Dow Chemical, it's easy to see. In fact, let's just go to a 1-month chart. Let's go to a 2-month chart. Okay. Dow has bounced off the $61 top for resistance, and it's got support right around $55, $56 a share. So right now, based on the last month or so, it's going sideways with a downward trend in the long term. So if it goes up to about 60, I'm going to start selling the calls around 61. So I don't think it's going to go up there. I think it's going to come back down. We could do it right now, but we're going to make more money if we let it go up a little higher. And I want to see that it's bouncing off resistance at the top before I enter the trade. You never know. This stock could keep climbing up and just keep going. So I really want to see the stock going in the direction I want it to go before I enter the trade. I want to see it bounce off resistance before I enter the trade. But we're getting close on this one, possibly, for Dow. Let's look at another one. Johnson & Johnson. Another great big slow lumbering Dow stock, which I love to write credit spreads on. Long-term downtrend, and Johnson & Johnson has just bounced up a little bit from a couple weeks ago. You got the low of around 157. It's bounced up to 166. That's at the very top yesterday. It's coming back down. At some point, I'm probably going to sell a bearish credit spread, enter that trade, and sell a call up around maybe 167. Thinking about it right now, but not sure I want to pull the trigger yet. I actually want to hear what Mr. Jerome Powell has to say before I place any more trades. One more that I'm looking at is Walmart. Let's get a bigger picture on Walmart. So let me scroll down. Go to a 3-month. Okay. That shows it pretty well. In fact, let me show it a little bit more. So let me go to let's go to a 6-month chart. Okay, that shows it really well. It looks like we're bouncing off resistance right here, where it bounced off about 2 months ago. Let's see, back in August, about 3 months ago. And one of the things that I really like, what I'm seeing about Walmart, is in the past week or week and a half, it's bounced off this price level once, twice, 3 times around 150. It's gone slightly above it, come quickly back down intraday. So anything above 150, they're selling off pretty fast. So I don't care if it goes up above 150, but I want to see it come back down. And in fact, it's trading below 150 right now and not showing a lot of strength like it's going to make it above. So I am looking to sell maybe a 155 call, maybe a 152.50 if they offer it. That's really what I would prefer. Now, you could sell, if you want to be kind of aggressive about it, you could sell a 150 call right here. But you don't want to do the tight stop rule if you do it that way. You'll make more money, but you have more risk if you do that. Okay, for our purposes, I don't want to do that. It's too close. But depending on the price of these stocks, they either have a $2.50 or a $5 increments on the strike prices of the options. So I'll have to go look and see what's available. But this is looking pretty good. I like the way it looks right now. So this could probably be the very next candidate for a bearish credit spread.
Walmart has the earnings on 11/16.
Oh, they do. Let's see.
Thank you.
Yes, I said that, didn't I? So 16. So what is that? So if we did it, we'd have to only go to the 12th. And I'd prefer to stay away from that. I'm going to sit back and watch. I always have to, and that's a good thing. You always want to put that on your checklist to check earnings before you pull the trigger on the trade. Thank you, Ben.
Well, that was a comment. Thank you, Sorcerer 417.
Okay, appreciate that. Keep me in line. Let's see. Let's look at some of the questions here.
I think we start with I own shares of AT&T. What would you do? Outright shares of AT&T down 8%. Or just a advice question.
Okay, so for AT&T, if you are in, I'm assuming you're talking about your investment accounts. So let's go to a long-term chart. Let me go past 6 months. Let's go to like a little bit longer chart. No, this is Walmart. Hold on. Let's go back to AT&T. Okay. This is a pretty sick looking chart. This does not look good. It looks very unhealthy. And the most glaring thing that I see in this chart is the gap down that was enormous in the middle of this chart. Usually that's in response to earnings. And so they probably announced a bad earnings report back in May, and it hasn't gotten any better since then. So if it were me and I owned this stock in my investment portfolio, I would probably just be selling all of it immediately. Now, I'd want to look at the financials and see if I'm right about my assessment here, my guess. But I'm pretty sure I'm right. In either way, this chart does not look good. I'd be exiting all of it ASAP. Okay. Just not a pretty looking chart. Doesn't look like it's going to get better anytime soon. So Ray says, ask the question, do you look at stock fundamentals while evaluating trades? I do as a backdrop. The most important thing is actually the chart, because if you think about it, all stocks fluctuate. All stocks go up and down. And so for trading purposes, we want to look at what the chart is telling us. Support, resistance, and trend, the most basics of things. Okay. But in the long run, all stocks are going to follow the financials. But all sorts of crazy things will happen in the short term for stocks. So in the long term, the stocks will follow the financials, but you have to understand that how the economy is doing is also going to affect the financials of every stock in the stock market, every company. So that's part of the calculation. Okay, and that's why we have to be careful, because they're talking about tapering, which could start to bring the market down. Just something we're keeping an eye on. But for right now, for trading purposes, we're definitely keeping an eye on the charts and just being aware of what the financials are saying and what's going on with the economy. That's why I bring up the big picture information on the Chinese real estate market and other things. Okay, let's see here. YouTube user, I bought a $70 121.22 call in DD. I do not have a stop on it yet. How do I know when to take profit? Let me see if I can pull that out just a moment. DuPont. Okay, let's see here. Ooh, okay. Looks like DuPont has spiked over the last few days, really rocketed up. Now, let's see, you put a 70, let's see, I bought a $70 call in DD. Let me look at it. Okay, yeah, you would have a nice profit on that. So at this point, it's really a question of playing chicken. How much further do you think DuPont is going to go? Based on how far it's spiking right now, I wouldn't want to rush it. Give it a little room to make you a little more money, because it's going up so strong over the last 2 or 3 days. So I would expect it's going to top out maybe in another week, just as a really rough guess. Going to watch it. I would expect it, based on what I'm seeing here, I would expect it to kind of round off you see, right now, it's all about momentum. The momentum is all straight up right now for DuPont, for this stock. And so as long as the trade is going your way, you don't want to quickly exit it because you can make more money on this. I would expect it's going to top out around 83, 82. When it starts to go sideways, that's when you want to consider taking a profit. The momentum is ending. The sellers are starting to overpower the buyers. That's when you probably will want to take your profit. But then again, sometimes the stock will do a little pullback and then do another leg up for another week or two. So you said this goes up until January 21st. So you've got plenty of time. I don't think that you see, anytime a stock goes way up on heavy volume, like you see on this, that's the professionals loading up on the stock because prices are really good. That's a great indication stock is going to keep going up at least for a while. Okay, so I would expect this thing to round off at some point a little bit higher than it is now. That's the best guess I can give you at this point. Just keep an eye on it, and it's kind of a game of chicken, but that's about what you want to do to get out. Would I put a trailing stop on this? I have exited too soon more often than not. Okay. This is actually one of the professional coaching advice that I give. If you know that your mistake is exiting too early, then try to do the opposite. Try to exit a little bit too late. Okay. Try to go against the grain of what your emotions are trying to tell you to do. By the way, this was a fantastic trade. I assume you got in right before the earnings announcement and then it shot up. So nice job. That's kind of a high risk, high reward strategy, but it's fun to do from time to time.
Yeah.
Well, we might get into that at some point. So that's really all I have for you for today, unless you have any other questions for me.
Great trade, YouTube user, and good questions. Good questions today, guys. Yeah,
we appreciate it when you're active with us and participate. We really do.
Absolutely. I like high risk, high reward. At times you will. At times you will. So, guys, if you remember to subscribe to this channel, a lot of people are asking about replays. You can get replays to basically any of the shows just by going to the channels, hitting the content, and sorting it by date, right? But also, Greg is here to answer any questions. We have a question on evaluating Tesla.
Okay.
Tesla.
Yeah, let's talk about Tesla.
Let's talk about Tesla. And M is, but as I was saying, you can always send any emails to options@thetradersplan.com and we will do our best. So Greg is going to go look at Tesla. The craziest ticker of the year. Hey, Greg, you're muted.
Okay, sorry about that. Didn't want to have you hear me cough, but on Tesla, what we see here is that it gapped up on earnings. I think it was earnings, and we sold a 1,000 put on the day of the gap up day. And boy, it scared me because it had a huge volatility day the next day and almost got us out the very next day. It only was up about $1 or $2 above our stop point, but then it snapped back up. So it scared me. And I decided to pull the trigger and lock in a profit. There's nothing wrong with that with credit spreads. That's more of a crime if you're buying the stock outright. Okay. But we got out of this trade and locked in a profit, and it's still doing good. If you got into this trade, so that's what happened with Tesla. I got out. I just wanted to lock in the profit.
as far as evaluating Tesla overall, that is extremely hard. Tesla is a wild unicorn, and but as far Frank, were you just talking about evaluating that Tesla trade? Are you still in it? I had somebody tell me the other day that they were still in it, that they missed the exit and were running wild with it.
Well, you're doing just fine if you did that.
Yeah, no, I mean,
the trade worked out. It's acting a lot like I thought it would. It just made me nervous how volatile it was the second day. I wasn't expecting that. Yesterday, Elon Musk said something about Hertz didn't have in writing that that they're going to purchase 100 Tesla vehicles or something. So the stock went down a little bit yesterday, but it's recovered nicely today. It's likely to keep going up for a little while further, actually.
Yeah.
Okay, let's look at the other one, Macy's. Macy's is still in a very nice uptrend. So since right now it's towards the top of the highs, we don't know when it's going to snap back. Okay, so really what I want to see it do is come back down to a support level, just like it did a week ago and 2 weeks ago.
Mm-hmm.
A couple of weeks ago, it leveled out around $22 a share. A week ago, it leveled out around $25 a share. I want to see something like that, some sort of support before it starts to go back up. So 2 trading days ago, would have been a good entry point to sell a bullish credit spread, to sell like a 26 put, or maybe a 26.50 put, 25.50 put, something like that a couple of days ago. As it starts to go up above the previous day, starts to show that it could be rallying, that's a good place to enter the trade. Not only to buy the stock if you're buying it outright, but also to do the bullish credit spread. Okay, so I don't want to enter the trade right now, though. I don't want to do a bullish credit spread because it might keep going or it might snap back. I don't want to do anything on it until it pulls back, hits support, it starts to go with the trend back up. That's where I want to enter a bullish credit spread. Okay, so Frank, we did cover a few of the trades we're looking at. I haven't pulled the trigger on anything else yet, but that's what we've got going on.
And of course, we'll be sending out any entry and exits if you're a part of the Credit Spread Accelerator program via text and email. So we're just kind of working that watch list, right, Greg?
Yep, that's right.
But right now, after booking a profit off Tesla, the current trades that we're in are looking good.
All three are looking good right now.
All three are looking good. And if there are any questions along the way, you know how to get a hold of us.
Okay. Yeah, you can always email me with any questions.
Options at thetradersplan.com.
Tradersplan.com, that's right. So if we don't have anything else, that's all I've got for you for today.
Thanks so much, Greg, and thanks to everybody for attending. I'm starting to see some familiar names, and what could we have done? What could we have done when you say bullish credit spread?
Okay, so a bullish credit spread means that you think the stock is going to go up, and so you sell a put down below where you don't think it's going to go. So just for example, on Macy's here, I would want to see the stock go down to a support level. Let's say it goes down to 27, goes sideways for a few days, starts to go back up. I don't think I'm just assuming that the uptrend is going to continue because it's gone down to a pullback and starting to go up again. So I might sell a 27 put and buy a 25 put. Or I might set it a little bit lower, depending on where it is. but that's how you set up a bullish credit spread.
Keith, great question. So all of the recordings would be on this channel on YouTube. So if you just filter them by the date, like if you go to the Traders Plan YouTube channel and just filter the dates, you could, everything we produce will go to the top. So Steve's Monday class, this is the Wednesday class, everything goes straight to the top. Greg, I think we need to get you a page where we have your current trades and like the last 3 shows on the page, because I love this class. There's a lot of enthusiasm in it. And I seem to have to send out those replays a lot. And I think it might be easier if we just put them all on a page, you know?
Sure.
Along with some recorded content. Maybe that would help. Because great question, Keith. It's just I get that question a lot. So apparently people are watching the replays, which is fantastic. We could start sending out a link and just putting that stuff on it. I could take care of that just to make it easier for you guys. And any questions, any topics, I've kind of been emailing people, but you know, we're trying to come up with some educational topics around this as well that just fit the questions that you're having. Like we could tell you guys everything we know about credit spreads, but any questions that you may have, and that kind of gives us that validation that, okay, this is where people may be struggling, and Greg and I can put up something, you know, that may solve that issue. So happy to do it. Just let us know.
Okay.
Thank you, Frank. Thank you, Keith. Thank you, YouTube users. Thank you, Greg, for all the great information.
You're welcome. Appreciate it. I really enjoy doing this. I love helping people make money in the markets.
Absolutely. All right, guys. We'll see you next Wednesday. Have a great trading week. Thanks, everybody.
Have a great one. Thank you.